The Chinese Tesla, or should I say NIO, is a company that has been talked a lot recently in the news because of its recent earnings, but also because of its impressive dip. So today we are going to see together if NIO is a good stock to buy right now or not. First of all, guys, I wanted to say I'm sorry because it's been quite a big month since I haven't uploaded any new videos because I had many different things happening in my life recently. But now I'm back and I'm gonna continue to propose to you guys the best quality content that I can produce. And today we're back with the second episode of the series Is It a Buy or Not? And we're gonna sit together and analyze one of the biggest EV company in the world, which is the Chinese company NIO. And we're gonna see together how does their recent earnings about the fourth quarter of 2020 impact their present value on the stock market. So now let's jump back right into the presentation of the company. NIO is currently considered as one of the biggest EV company in the world, and it's considered as the biggest one in China. So this company is pretty new. It has been founded in 2014, and its first model of vehicle came out in 2017. But what is really interesting about NIO is the fact that many big Chinese companies decided to invest into it when it was first launched in 2014. Those companies such as Tencent, Temasu, and Bisec all invested into it. And when we take a look more recently, we can see that they have agreed in January in 2021 they have agreed to do a big partnership with the American giant NVIDIA, which is a company that is acting in all the electronic component. So this partnership will have as the objective to develop a brand new generation of automate electric vehicle. So this is really good news for both companies, but for NVIDIA it's really interesting because it will help them to build some brand new vehicles. So after it, when you take a look at the stock analysis and when you take a look at the company, it's important to understand how the company works. So the expansion, the potential expansion. So right now, NIO is the biggest company in electric vehicle field in China, but they have still potential to expand even more because the creation of value from this company is important, because this is also another important aspect to when you analyze a business. It's the creation of the value from the business. So in this case, electronic vehicle is really acts on the future, and many different people will need electric vehicles in the future. So this is something really important. And after it, two other things that are really important to analyze when you take a look at the company itself is obviously the market on which it evolves and also the different competitors. So first of all, when we take a look at the market, and this is really something interesting, the market. So first of all, there is many people that are afraid to invest into NIO because of the market, because it is evolving on the Chinese market. And obviously with this market there is some political risk and some instability that is linked to the market. However, when we take a look at when we were last year at the same date and when we were during the pandemic, the government helped NIO. So that shows that they are trying to help. And when you take a look at the field on which NIO are acting, they are acting on, as I told you, a future really important aspect. So the electric vehicles will be really important in the future. So they are also acting on one of the biggest country in the world, which is China, with more than 1 billion of people. So for them, it could represent more than 1 billion of potential future consumers. So that's really interesting to see, and that's why there is some risk, but at the same time there is some big rewards that could be that could be just linked to it. So that's important to understand that the field on which they evolve is really acts on the future. So that might be interesting and important to understand. And they have been helped by the government, and they have some potential great demands in their countries. And obviously, when we take a look at the competitors, we see that the main one in the electric vehicles sector is Tesla. And now what we're gonna do, we're gonna just do a little comparison with Tesla just right now. When we take a look at the evolution and the progression of the value of NIO through the years, we can see that at the same date last year when the pandemic hit, the stock was trading around or $3 per share, but since the stock was introduced on the stock market around $10, it didn't really dip a lot from the pandemic. So the pandemic didn't add much impact on the stock because it was already at a price of $2 or $3 per share. But when we take a look at the chart over here, we can see that at the beginning of summer last year, or so around the beginning of July, the stock began to take a lot of value due to the fact that the company was becoming bigger and bigger, and people began to know more the stock, so it began to take a lot of value, and it's reached its highest point around the beginning of 2021, so around $65 per share. And it also began to fall on the mid-February when there was the drop and the correction on the market on the growth stock sectors and also on the EV sectors. So it went from $61, $62 to $35 when it dipped at its lowest point, and now there is a readjustment, so it's becoming higher, so the value is increasing, and it's at a current price of $45.5 per share. When we take a look at the evolution of the value of Tesla, so the main competitor of NIO, we can see that at the same date last year, the stock was trading only at $8,900 per share, so it was quite low because the stock has been highly impacted by the pandemic, because we can see that over here the stock at the end of February and in mid-February 2020, it was trading around $180 per share, and it dipped to $80 per share, so almost like 50% of drop. And after, when we take a look on the last summer, so in 2020 and in also in autumn, we can see that the stock really rise a lot in value. So it gained almost 700% to reach its highest point over around $850 per share. And since February, obviously, it also dipped to its lowest point of the dip was around $550 per share. And since that point, there has been a little bit of readjustment, and now the stock is around $700 per share. So when you compare NIO with its main competitor, which is Tesla, the first thing that you notice is the difference in the price of the stocks. So on one side, you have NIO that has a price of $45.5 per share, and on the other, you have Tesla with a price of almost $700 per share. So you can see that NIO is way more affordable than Tesla on this side, and that could be explained by the fact that NIO is a younger company than Tesla, and as I told you, it has been founded in 2014. And even though we can see that NIO has quite a big market capitalization with almost $71 billion of market cap, and if you remember well what I told you in my previous video about the stock analysis, and for those who haven't saw it, I highly recommend you to go check it out to understand what does those ratio means. And in my book, a market cap of more than $5 billion is a big company, represent a big company. So NIO could be on this side represent to be a big company. But when we compare it with Tesla, which is one of the biggest companies in the world at the moment, we see that its market cap is such tremendous, with almost with more than 650 billion of market cap at the moment. After this, when we take a look obviously at the 52-week range to see the volatility of the stock during the past year, we see that on NIO the stock fluctuates from 2.11 at its lowest point to almost $67 per share at its highest point. On the upper end, we see that Tesla has been trading at its lowest point around $70 per share, and at its highest point around $900 per share. So we also see that because of the price and because NIO is quite cheaper than Tesla, the volume of it of the trading are way higher than in Tesla, and this is explained by the price of the stocks obviously. And the last indicator and the last basic indicator that we can take a look at is the P ratio. Unfortunately, we cannot see the NIO P ratio because the company is quite young, so it doesn't have a P ratio at the moment. But when we take a look at Tesla, we see that its P ratio is over 1000 of P ratio, which is very high, because for those kind of companies, a normal P ratio would be around 20, 25, 30 of P ratio. But in this case, it shows that with this P ratio, the company is really highly overvalued. When we analyze both of the income statement of both companies, well, this one is for NIO, but the first thing that you should take a look when you analyze the income statement obviously is the revenue. So to see the health of the company, you should see some growth in the revenue. So in the case of NIO, you see that the revenue in 2018 were around 5 million, and now they have more than triple, and they are at 16 million, which is very good for the revenue. So that means that they are increasing their sales, and we will see it later in an article, but they are increasing their sales, so that's really some positive news. And when we take a look at Tesla, it's the same, but the increase has been a little bit lower compared in the percentage compared to the previous year, but we see that they are still having some great increase in their revenues on that side. And what is interesting with both of these companies is not necessarily the revenue, because we see that their revenues are increasing, but it's also about all the expenses, so the operating expenses and the interest expenses and everything. So you have the total expenses over here for NIO, and you see that this is normal. Obviously that the expenses are increasing because the company is producing more, so when you produce more you have more expenses. At the same time, this is all linked, but the fact is that their expenses is higher than their revenues. So that means that their EBIT, which is the earning before interest and taxes, are still in negative, but they are diminishing when you see compared to the past year. So it's in a diminishing, but you see that their earnings are still in the negative, and it's the same. Well, for NIO it is the case presently because the company is still new, as I told you, and it's a lot helped by the government with different financial help from the government, and that's normal because those companies are priced with basically the future expectations, and from the help of the government, it helped them with the market cap and everything. So in this kind of case, you see that, well, when we take a look at Tesla, obviously, because the company is older, it began to just do some earnings, some positive earnings. But when you take a look at 2019, you see that the earning for such a big companies with almost 70 billion of market cap, only 20,000 million or 20,000 of earnings before interest, which is very low. And you can understand with that those companies are not priced because of all their sales at the moment, but more for the future expectation that people have, and because people think that the electric cars will become a must and everyone will buy from those companies, so it will increase, and that's why they are priced at such a high value. Finally, when we compare the balance sheet of NIO and of Tesla, here we have the balance sheet of NIO. So we can see that the assets are quite increasing compared to the previous year, because in 2020 it was around 45 and in 2019 it was at 14. So there was a big increase. And what is interesting when you analyze the balance sheet is to look at the assets, obviously, but at how much is the equity compared to the debt. So the ratio debt equity, which is really interesting to understand, because the equity is the capitalization, and the capitalization basically represent the part that is owned by the shareholders of the company, the part of the company that is owned by the shareholders, and the other, which is the total debt, is the part owned by all the debt, the mortgage and everything, and all the companies that have some debt, actually with that Tesla has, or that NIO has some debt towards them. So in the case of NIO, we see that the assets obviously are increasing, and that the capitalization is also increasing, which is really good. So that means that the shareholders have more, and that has been shown by the increase of the price, obviously, of NIO. And that shows that also when you take a look at the total debt, the debt is really stable. So that's a good sign. So that means that they are not using too much debt to cover their asset, basically. So when we take a look at its competitor, so Tesla, we see that obviously the total assets are increasing, but not as much as NIO in this kind of case too. And we see that the capitalization is also increasing, and the debt, we don't have the debt for 2020, but the debt was also stable, pretty much stable. So that was some good news on this side too. Now here we have a little article that shows how does the earnings of the fourth quarter of 2020 that just came out from NIO, they impact the value of the stocks. And what is important to understand is that it's not only about the earnings that is the reason why the stock drop of value, but that's also because of the fact that all the market was readjusting. But when I'm talking about all the market, it's not all the market, but it's the main growth American stocks, like stocks such as Apple, Amazon, Facebook, and everything, plus its competitor, which is Tesla. Also, they all dip and they all readjust of price. And but obviously the earnings of NIO is one of the reasons why the stock readjusts on the market. And the key points of it is mainly about the expectations that were really high for NIO. So we saw just before that the sales and that the revenue of NIO were increasing. The only problem, as we will see in this article, is the fact that the expectation by all the analysts were higher than what it was. So we see that the expectation over here, it say that the expectation for the fourth quarter of 2020, so the last quarter, were missed. So the expectation were too high, and that's why the company lost. They had some loss in their evaluation, and that's basically what we see over here. After, we see that obviously they also launched a new, I think this is a new model, the ET7, if I don't, yeah, this is the new model of car in early January. And after it, that's basically what is explained by this article, that the investor are looking forward for a significant improvement in NIO financial position. But when the result came out in the March 21, they were not as high as expected. So the investor were a little bit sad about it, and that's why basically the price went down. And that's mainly what we see in this little article. And this is the total revenue compared to 2019-2018. So we see that the estimation is higher, so it's quite higher than 2019. But we see that, and even the sales, so this is the sales, so 17,000 sales in the fourth quarter compared to 8.2 thousand. So they have doubled it. They have more than doubled it, but it was not enough compared to the expectation. And we see it over here. The earnings per ADS, they have been negative. So this is for the expectation, and that is one of the main reason why NIO has been in a downtrending since the mid February. As Warren Buffett would say, be fearful when others are greedy and be greedy when others are fearful. So basically, it is important to understand that NIO has a certain risk to it, but can also generate a certain reward. And even JP Morgan recently said in an interview and in the newspaper, they said that it's not time to say bye-bye to NIO, it's time to say bye-bye. So obviously, I am not any kind of financial advisor or any kind of financial professionals, and I'm only giving you my personal opinion, but it's your own responsibility to do your own research and your own DD about this stock and this company, because at the end, you might have a different tolerance of risk or a different time lapse than me. So it's really important that you do your own researches about this. But me, on my personal point, I see NIO as with a certain possibility to do a really great profit in the future, and that's why I decided to buy the dip when it went to $34, $35. I decided to buy it there, and personally, I don't regret it because I see a great potential future to the company, not only by the fact that it is acting in a field with a lot of future ahead of it, because obviously in the future we will be going into the electric vehicle field, and we won't use anymore the oil to with our cars, but also by the fact that it is acting on the Chinese market, which is even bigger than the American market. So obviously there is a certain risk due to the politics and everything, but at the same time there's some big rewards that you could have with this stock. And we also see that the revenues and the sales are growing years after years, and obviously right now it is not really like profitable on this side, because as we saw, even Tesla had some difficulties on this side, but there is a big opportunity ahead of it, because there is a big future, I think, in my personal point of view, with this company, and I'll really be looking forward to see this company grow in the future. Oh, and guys, I think that with NIO, with this price, I think it's really interesting also to buy it, because of the fact that it's pretty cheap compared to Tesla. So if you can get like 15 shares of NIO compared to one Tesla shares, I think that this might be really interesting for it. And personally, my buyer range, well, I would wait maybe until it goes lower than 40, but if it goes like at $40 or a little bit lower than 40s, I'll be really tempted to just try to buy even more and to add more shares of NIO, obviously. So guys, I hope that this video will have show you all the potential opportunities and all the potential threats that NIO could represent. And obviously, if you like those kind of video, I will invite you to just join the North family and subscribe to the channel. And if you haven't saw it yet, I highly recommend you to go check out the first episode of the series that was about Ryokan. So it's gonna be just right over here, and I'll see you there.